Hello, this is James Smith at GannAnalysis.net. Today I want to show you Brent Crude futures, the August contract. We draw a Gann fan up from zero at the time of this low. This is called a zero price fan. So why would you do that? Because there is symmetry between time and price. They have a relationship. So it's geometric, if you will. And we're using a scale, in this case, we're using a scale price unit of 0.5 points per month. So that's the scale, and every line that revolves around this 1 by 1 line is a derivative of the scale that we set for the 1 by 1. So 1 by 2 would be a quarter point per month. And a 2 by 1 line, by definition, in this case, would be a 1 point per month. So if this is half a point, quarter point, and 1 point. And then these other lines are similarly the same idea. So 3 by 1 or 1 by 3, 1 by 4, you just do the math. So the point I want to get across here is that if you draw this line down from high, you catch resistance, a lower high, another lower high, another lower high, and here it offered support. So it's an active line. It's working pretty actively. And the zero line, if you'd drawn this up from this level here, you would not have caught this high. So geometrically, by drawing up from zero, we actually caught this high. And for my clients, I did call this high back in March of 2022, based on the fact that you had a 10-year cycle, 120 months, high to high, and you were finding resistance at this 1 by 1 zero line. A zero line is just a line drawn up from zero at the time of an important low or an important high. In this case, we used a low. So going all the way back to the 1998 low, we took our Gann fan and drew it up from zero instead of drawing it up from the low. So sometimes you would draw it up from the low or down from high, but in this case we did it from zero. Now, since this gave us the high, we've seen this huge sell-off. Naturally, you should have had support here at the 50% mark of 78.52, but you took it out. Then you found support on the 1 by 2 line, sort of rough support. Then we rallied back to the 50% mark, and now that's resistance. This happens all the time. What was support becomes resistance. If you take it out and come back, now you have a selling opportunity. Of course, your stop loss would have to be just above this. Doesn't mean it'll work every time. Maybe you break out and rally. But the point is, you pay attention to what the market is telling you, not what the chuckleheads on CNBC are telling you. Financial media will tell you whatever they want to tell you, but the market is always reliable. If it tells you, okay, if you close above 78.52, hey, this is stronger than I thought it was. I thought it was going to go here and sell off. So you always check your view based on what the market's doing on the Gann chart. So this division from the high to this low here, we divided into 8 equal increments, and halfway through the swing is called the 50% retracement, a 4/8 retracement, if you will. You count the number of divisions, 1, 2, 3, 4, 5, 6, 7, and then 8. So we have two things going on. We have the Gann fan drawn up from zero, what we call a zero price fan, and we have the Gann divisions, retracements. Now, you might notice also that some of these divisions, like 2/8 down from high, gave you a high here, as well as the 1 by 1 line. That's always great. If you have a Gann line and a division, a Gann division or a retracement, offering resistance at the same area, that's a pretty good setup. So this gave you a big slide And notice here that the division down here gave you support. It was not far off of this Gann line here, this 1x4 line. So, we look at the Gann lines, we look at the Gann divisions. Look at this down here. This one here gave you a 1x8 line, gave you the exact low. Pretty amazing, isn't it? So, when people say the markets are random, they obviously haven't been looking at Gann charts, because this one caught a low, this one caught a high, this caught a high. You had temporary support here, you had resistance here, you had a high here. It's hitting all over the place. To say that markets are random, you have to be a complete frickin' moron. It's just impossible to look at this chart and say it's random. So, people can decide what they want, but if you're objective, you'll say that, hey, there's something to this Gann theory, right? So, Gann divisions, Gann fan, you use both together, and you also look at a few cycles, right? A 10-year cycle is a big cycle for Gann, right? 120 months, high to high. And it happens to meet with resistance at a Gann line, a zero line. Well, that's what we'd call a time and price setup. So the idea is that you complete a very important longer-term cycle as you're meeting with price resistance at a Gann line. So you have time and price working together to give you a setup which allowed you to have confidence in the idea that, hey, you're going to sell off. Now, sometimes you get it wrong. Like I said, maybe I think, hey, I think it's probably going to fail here. I don't care if the Saudis are going to do a production cut of 1 million barrels a day by July. I just think this line is going to offer resistance. Could I be wrong? Hey, maybe they surprise us and come out and cut another million barrels a day, and then it pops up here. That could happen. But the objective thing about the Gann charts is they tell us, hey, you know when you're right, you know when you're wrong. It's objective. It doesn't mean you're going to be right every time. That's not possible. That's not realistic. But it does mean that you'll have a better chance of correcting yourself quickly in a lose. If you were short here and it blows through this level, hey, you cover your short, right? If it actually breaks below this 1x2 line at 73.39 during the month of June, then you start looking for a move down here. So you have a trade either way, and you don't get dogmatic. I guess the reason I don't really like fundamentalism is because they get dogmatic. They stick with their view, and even if the charts are saying something completely different, they just double down. You can't do that and in the markets, because you're going to be wrong. You have to know where you're right, and you have to know where you're wrong. So if you close above 78.52, you know you're wrong, and boom, you're going to go higher. If you close below 73.39, hey, you know you're right, and maybe you double down, you add to your short position for a move down here to 61.28, 5/8 retracement. Again, what we're doing here from the low to the high of 5/8 retracement is 1, 2, 3, 4, 5. It's just a 5/8 retracement of that move from low to high. So if you get down here and you find support, maybe you cover your short. And now I'm not telling you to go short. I'm not telling you to go long. I'm explaining how the Gann charts are interpreted for Brent Crude, the August contract. So I'm just giving you the heads up that this is a very important tool, and you can really make sense of the markets if you allow yourself to be guided by the price action rather than the talking heads on CNBC or Bloomberg or, Financial Times, whoever, Wall Street Journal. They're all going to come out with their story. They want you to trust their view, and they want you to say, oh, well, the Saudis are doing this and OPEC's doing that. Yeah. it's the price action that you have to pay attention to, not what the talking heads are saying in the financial media. Price action is everything. The market is never wrong. The fundamentalists are wrong all the frickin' time. So if you just learn one thing here, pay attention to what the market is doing. If it breaks your level, hey, cover your short, because maybe it'll go up in your face. And if you're right and hey, you think it's going to go down, fine, you made some money. But you got to know where to cut your losses in case you're wrong. So this is just a quick introduction to two Gann ideas: the zero price fan, which you see here drawn up from zero, this Gann fan, and division of the range. Actually, one more thing. I haven't gone into detail here, but yeah, there are a lot of cycles for Gann. This is just one of many cycles. So time and price, when they come together, you get a change in trend. The way Gann saw the markets is that markets change trend when they're in balance. So this is a kind of balance when you get to the 1x1 line in sync with a 10-year, 120-month cycle. So time and price, when they're in balance, suddenly things can change. So it's just the opposite of what you've been told. You were told the efficient market hypothesis that when markets, you cannot beat the markets because they're efficient. By the time you take the trade, it's already discounted in the market. So don't try to beat the market. Just buy that passive index fund and sit back and play golf, whatever. But that's totally nonsense. The reality is markets are very rarely in balance. The only time they're in balance is when you have a big cycle or a cluster of cycles calling a top or bottom as you meet resistance on a major Gann line or a division, a retracement, or both. When that happens, you have a setup for a trade. And then you can know with confidence that, hey, we're overbought. We did a 10-year cycle high to high. We met with resistance on a major Gann line. Now we know with confidence we're going to have a pretty big sell-off. So you're going to have these huge trades. They aren't going to happen every day. But, when they happen, it's a great trade. So what I'm saying again is markets are very rarely in balance. But when they are, you'll know it because you'll see the cycles, you'll see the way the market's responding to the Gann line, and you'll be able to take a great trade. And you also know, hey, you know where your stop loss is. If you'd been trading this back here, it got to this level and you went short and suddenly it popped above it, hey, you're out of that trade. So Gann is a system of thinking. It's a way of looking at the markets that it's called the geometry of time and price. When you look at both together, you find yourself in winning trades. If you're a normal chartist and you say, I'm only going to look at price, you miss out on a lot of trades, including this one right here. So if you find this interesting, go to my website, www.gannanalysis.net, register, you get some free reports, and if you like it, maybe you try the daily service for 3 months. Try it out, see how you like it. If you don't like it, you don't have to keep taking the service. But, if you like it, hopefully you become a long-term client. So I hope this has been helpful. If you have questions, you can email me. Happy to answer any questions you might have.